Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Merryn Talks Money Market Wrap, where we talk about the biggest moves in markets this week and what's driving them. I'm Stepek, senior reporter and author of the Money Distilled newsletter. Merryn's off on holiday for a few weeks, so I've invited show regular Marcus Ashworth, Bloomberg Opinion columnist and markets guru, to join me in the studio. Nice to have you back, Marcus.
You said that with a straight face. No, you haven't got a straight face, have you? Yeah. Well, always a pleasure, never a chore.
Right, so anyway, let's talk about what's been happening this week. And at the weekend,
we have a deal.
In my old stomping ground of Girvan, on the Scottish coast, the Scottish Riviera, no less.
It's been very amusing watching people work out, where is that?
Yeah. There's a big rock in the sea called Ailsa Craig.
Yes,
and it's a very, very beautiful sight whenever you come over, assuming that it's not raining, which it never isn't. But anyway, so Trump and the EU signed a deal.
What a deal. Full of three lines?
Deal. Yeah. What's your take? Because I'm looking at it and the idea is that, so they basically get the same deal as Japan, 15% across the board on everything the EU sells into the US, and basically nothing from the other side. And this is one reason that everyone in the EU is feeling a little bit aggrieved, a little bit humiliated. But is that the right reaction?
I'm going to take, for a change, a controversial view on this. I actually think the EU have done a lot better than they give themselves any credit for, because it's all a lot of politics internally. And sure, this isn't optimal. However, if you look at the so-called great deal that Starmer pulled off the UK at 10%, an extra 5% isn't that much more, considering the situation where the UK actually essentially is running a trade surplus with the US. They are not in the bad books, certainly on goods anyway. Yeah. Let's leave services out for a moment. But the EU is the largest importer, into the US, which export into the US, pardon me, in the sense that they are the biggest problem as far as Trump would like us to see it.
Yeah.
Therefore, and also there's a lot of bad blood over various different approaches to stramashes with the Ukraine and all manner of stuff that clearly Trump has had problems with the Europe. So in some senses, it's shown that he's wanting to do a deal. And of course, the promises on both energy and further investments into the US are pretty open-ended and arbitrary. But it's a gesture of faith, and it's a warm, fuzzy feeling. Sure, they might have liked to have got particularly wine and spirits nailed down, and they've still got ongoing problems in steel. But the auto situation is bad but not terrible. And Merz, the German Chancellor, was correct to say that this isn't, clearly growth is going to hit very hard, which I cannot understand, therefore, why the European Central Bank seem to think they can hold rates at 2%. But that's up to the side for the moment. But they will have to cut more, because this will be bad for the European economy. It's just potentially manageable. And they will be able to negotiate through this and ongoing. This is a process. This is not a bit like Brexit. Brexit is not an event. Brexit is a process, and likewise these trade deals are going to be something which will be ongoing for the rest of our long, hopefully, and happy lives. John, we'll be talking about these subjects because it's a new thing and it's not going away.
Well, the one thing I wanted to talk about was what is the purpose of the tariffs? Because one thing that I don't think people have talked about quite enough is, the US is going to make something like $300 billion extra tax from that this year, from the tariffs. In fact, that's some of the numbers I've seen thrown around.
In theory, the volumes stay up, which they won't, but yeah. Okay.
Yeah, absolutely, yeah. But you're still talking about that is something like 5% of the tax take currently. And it's the equivalent of Rachel Reeves finding something like 60 billion down the back of the sofa.
Sure. For our pensions, you mean?
Yeah, but I'm just wondering, it sort of feels as if the reconfiguration of how the US taxes the rest of the world and its own people.
We both agree on this. Essentially, and I think this is I'm amazed that the commentariat refuses to go on this, but to my mind, what Trump is trying to do is change the US corporate tax code specifically from without. He cannot change it through Congress. He doesn't have the ability to get it through. He's got his big, beautiful bill through, and that is a pretty meaningful change for a couple of ways. One, obviously, it locks in the tax code where corporates are desperate to keep it and rather having it rise again, as would have done under Kamala Harris. And so he's fulfilled his side of the bargain. But in reality, what he's trying to do is be elected, not say him forever, but MAGA forever, by essentially being able to offer a huge income tax cut up to be it 100,000, 150,000, what it may be, funded by corporates. This is bringing back onshore US corporate revenue, and he's having to do it by changing the rest of the world rather than changing the US domestic tax code, and indeed say their sales tax into, say, a VAT tax.
Yeah.
So he is doing this, and that's just why, one thing we haven't got in the European deal with the US is the pharmaceuticals, which Ireland knows is coming down the pipe. It's going to rightly probably change the dynamic in how so many, particularly there's over 700 multinationals based in Ireland, and they are having a fine time of it all, paying relatively minimal tax. And I think that's what Trump is really after. He's going to do it carefully and slowly because he doesn't alienate his Irish popular base. But at the same time, he needs to make sure that this is all workable for the likes of Eli Lilly and Bristol Myers, etc., etc. Yeah. But there is a reckoning coming there on how much tax they are keeping offshore and how much we're going back on onshore, and indeed what the pharmaceutical production will be. And that's the same for steel, and that's the same in some senses for autos.
See, I've got to say, I think this is where Trump is
winning.
So he's winning, and he's really underrated because he's really imposing some massive stealth taxes here and being applauded for being... for being a great kind of
the
leader.
big mistake was in 2001, China was allowed into the World Trade Organization and it exploited it ever since. And I believe the Germans and the French, to a large degree, have enabled that. And it's been quite a useful technique for them to sell a lot of stuff into China. One thing you must look at on all these things is the euro to the yuan exchange rate, because that tells you much more. The euro is record high. It's causing Europe a lot of pain on both sides. It has to choose whether it's in bed with the States or it's going to, somehow do a deal with China. I don't think either are on the option. They've chosen the least worst option, which is doing a sort of placemaker deal with the US, because they are the dumping ground potentially for China. If Chinese can't sell goods into the States with such high tariffs, they're going to sell them into Europe. So there is an awful lot going on within Europe as far as realization that they need to help themselves, spend a lot more on defense and a lot more on infrastructure. That has yet to transpire. A lot of promises, we're yet to see it, but at least they've walked through the ring of fire. They can come out the other side and they'll still be alive, a little bit singed, but maybe they can do a better deal slowly but surely. But they are not out of the game. By putting retaliatory tariffs on US, they would have fallen into the trap where they were being shown to be the one that they're an example of. Hopefully that or may not be China, but it's certainly not going to be the EU, and they can move on. And over a period of time, if they do deals and do the right thing as far as Trump can see, you'll find these tariffs will melt away, I think. Yeah.
No, that makes a lot of sense. Turning away from kind of transatlantic affairs and back to our own little island, this week we've had the other thing that's been happening is Rachel Reeves and Andrew Bailey at the Bank of England have had a bit of a spat over...
Allegedly. Yes.
Allegedly.
Well, this is not over monetary policy, which I've written about before, which is clearly that Bailey plus others have fallen out with Reeves' economic strategy and do not believe that the tax rises and variety of other different things have gone through since April have helped the economy or are a good thing. However,
that is, to be fair,
regulation.
Yeah, a reasonable point of view, though.
Well, I couldn't possibly comment. You may think that, John, but other people seem to do as well.
She hasn't managed to get half of it through for a start.
The spending bit has seemed to come foul, but the tax rises somehow seem to come through. Anyways, this is a separate matter where she's under a lot of pressure, which she seems to be recognising that she needs to help the city, the financial industry. And one of the key things is obviously Revolut, which is a, proper challenger bank, not like the sort of nominal ones which haven't really challenged anything, but this is a fintech revolution of Revolut, which will be a big challenge to the major high street banks over time. And it should and could list in the UK. And we missed out on Shein, maybe for the best, but we would and should really have a homegrown monster like Revolut should be listing in London, but is now allegedly looking at listing in the US. Now, a lot of this is performative, stuff, perhaps. At the same time, is looking potentially to buy a US bank to get the license, the key thing, a banking license in the States, because we in the UK will not give Revolut a banking license, despite it being a vast number of customers anyway, presence. And there's lots of further hoops, rightly so. And I think what Bailey has said, look, don't just lean on the Treasury, lean on the Prudential Regulatory Authority, smash heads together and get us the way through a banking license for Revolut, because the knock-on consequences are bigger, more profound for the existing infrastructure of banks. But more importantly, naff off, Godber. This is our patch. We don't want the Treasury, the government, leaning on telling what the independent Bank of England financial regulator is allowed to do, and when it does it, it's only sweet time. There is a point there, possibly a valid one, but you can see for once Reeves may well have a valid rationale that the regulators, which he's been stamping on fairly brusquely with the CMA and changing the head of that and a few other clearly measures on the Financial Conduct Authority have got out the way of a bunch of stuff. And there is a message coming through from the regulators. We get it. We will get out of the way. We are trying to be proactive and look at growing business rather than just saying no to everything. But maybe the Bank of England hasn't quite got the message. But certainly I think it's an interesting dynamic that the Bank of England governor, on both the two hats he wears, is pushing back against this government, which you wouldn't necessarily, being cynical, have expected.
It's fascinating to me that Reeves, the way that she's trying to kind of ignite growth or get growth going is to make the regulators feel uncomfortable.
She's not joining the dots up. She should have the Bank of England governor totally on board before this happens, not have to have a spat with him because he's feeling, you're stepping on my turf. So this is where the politics doesn't join up. She's lost the room as far as her economic policy is concerned. And she's at risk of losing whatever potential sort of, from her prawn sandwich offensive prior to the election of like, yes, we get the message, we will help industry, we will help business, we will certainly help the city. At least she understands it, but it's the enactment in power of policy which is not necessarily as joined up as one would hope. However, that does not in any way perhaps excuse what the Bank of England governor is doing on himself with regards to his woeful approach to monetary policy, or indeed his digging his heels on what I think needs to be resolved. I mean, Revolut, to my mind, does deserve to get the banking license because it will just simply walk away.
There's a fundamental problem with the length of time this stuff takes. I sympathise with Reeves's view. The thing that baffles me slightly is that it's almost like she knows what should be happening in an ideal world, but her way of getting there is somehow to keep adding bits and controlling things and trying to twiddle with this knob and dial that down, when in fact maybe the best thing to be would actually just scrap some of this stuff.
Suboptimal. Well, I think, in some senses, she is, I think, got the right idea behind this. It's just the enactment, as I said, is perhaps still a little naive and perhaps a little amateur. But equally, I think she's has to bang heads together, and I'm going to give her the benefit of the doubt on this one. And I think Mr. Bailey needs to be. I understand why he's doing what he's doing, but equally, this cannot be the excuse always that we do have to get a real on this stuff. We've lost Shein. We do not need to leave Revolut. We need to get our act together commercially. Because if you look since 2008, the reason why the UK economy has got nothing to do with Brexit, it's got to do with the fact that the financial industry has been severely heavily regulated, probably for initial good reasons. But you look at what's happened to the US banking sector and the US financial sector, which is leaps and bounds done better. And we have made ourselves unnecessarily hampered and hamstrung on every single step. We need to be proactive and get it. Otherwise, we will lose. We are already losing, hopefully not terminally, our financial sector, which is the largest earner of tax and 12.5% of our economy as was. And this is we want to have sufficient revenue to taxes to be able to do all the spending plans they want. The easiest and best way is to make sure that your financial sector, which is world leading, stay so.
Yep, that makes perfect sense. And I
Which
guess
means it will never happen then.
Yeah, exactly. I suppose, but for moving on from that into a kind of related topic that you wrote about this week, you kind of reckon that we're going to need this growth because the UK consumer is looking very, very timid at the moment.
Well, it's actually held up. It's held up pretty well, but we've had a very nice summer, which affects dynamics and certain things that help some hospitality and some retail. It hampers some retail in different ways. And obviously, if you have a very warm autumn, it means people don't spend for winter clothing, and you have a bad start into this sort of golden quarter of the last, to where Black Friday is named, at the end of Thanksgiving for a reason. It's when retailers in theory turn profitable, and certainly what they need is the consumer to keep on turning up. 3/5 of our economy, 62% is consumption, which matches 68% in the States. We are big consumer-led economies, UK and US, very similar in that way. And we need the consumer to stop some saving, but we're seeing bank deposits rising. We're seeing the savings rate go up, which is a precursor of the paradox of thrift, which is in essence people hold back. They're unsure what's going to happen in economic policy. If we get a rinse repeat of last year when they came into power on July the 4th and basically said, right, there's black holes everywhere. The world is going to end. We are going to have to really do bad things in October budget. It just killed the momentum of the economy. It killed confidence, which has not recovered since obviously all these tax rises came in play in April. We are under the threat of the same happening again, and that will be really compounding the felony, and I think would be criminal in the sense of, I think Reeves would not recover. She's managed to hang on for more by luck than judgment, but she cannot have a repeat of what happened last year into the run-up into this year's autumn budget. But the consumer is showing signs of being fearful and of pulling back, and there's definitely food inflation and definitely the minimum wage rise and variety of other employer taxes and other national insurance contributions is really feeding through. Employers are feeding price rises into the system, which is starting to hit on consumer activity, and saving rates going up. That's where people pull back. Money sat in bank deposits is not working in the economy, which means growth will fall off, and they need it. They need it to get through. As they can't cut spending. They've basically said in this government they will not be able to cut back on any of the welfare budget, unless they have a wholly new approach, which they'll have to, but the string isn't coming together. Yep. And I fear that we will have a very large pension tax rate and obviously a fiscal drag on income tax bands extended in the October budget, and and consumers can smell this, and that's why we end up getting the cause and effect where all of a sudden things get worse before anything has actually really happened. But by that stage, it's too late. Oh, no, I wasn't going to ever do this. Well, you've got to tell us up front what's, wealth tax, for instance, seems to have been ruled out, but it hasn't been ruled out in a definitive sense, but she can't rule it out because she's worried about her backbenchers. Aye. However, something's going to have to give, and I think that requires a much more proactive approach on being honest with what she's going to do and why she's going to do it. And I think some pension tax reductions, and as far as the tax relief is concerned, as far as the annual amount and one or two other things, can make some sense if it's presented in a coherent way.
I mean, I suppose it might, because it's future pain in a funny kind of way, saying fiscal drag, you might get away with it. But this is a topic for a different podcast, but the problem with reforming pensions tax relief is always that under the bonnet, it affects the public sector as well. And that's one reason why they've always...
Well, it never affects the public sector pension. That's part of the problem.
Well, no, yeah, exactly. But what I mean is, if you do it properly, then you end up having to increase the contributions that they make.
They can't do wholesale reform because they don't have the bandwidth to do it. They don't have the ability to do it.
Then they don't raise enough money.
Despite their majority, they don't have that. They're going to tinker. They're going to cut some things back. Perhaps Jeremy Hunt was a little bit too generous on a few things prior to the last election. We all know what Reeves should have done was just reverse his two employee national insurance sort of bungs, but equally on some of the pension stuff that he did, perhaps he was too generous. Maybe some of that would get rowed back. But the reality here is really going back to 1997 when Gordon Brown did two things, which, the Bank of England independence, everyone seems to think is a great idea, though the Bank of England, I don't think, has lived up to its task, not in recent years particularly. But the other thing he did is he cut dividend tax credits, and that is still killing our pension, and it's killed our financial sector. It's the main reason, actuarially, why you have very low investment in UK equities. These are all things that all cause from a under the bonnet, as you said, change, which no one will notice, and he got away with it. But but like selling gold, when he did, these things come back and continue to cause us pain even now.
It's always good to end on a high note.
Yeah. Fuss and grumble always happiness.
Yes. Yeah. Thanks very much, Marcus. I look forward to having you back on. Actually, probably next week, because Merryn's still on our holidays if you're around for another session.
What's a holiday?
Exactly. See us up the workers, that's what I say. Anyway, thanks for listening to this week's Merryn Talks Money debrief. If you like our show, rate, review and subscribe wherever you listen to podcasts. Make sure it's a 5-star review. This episode was produced by Summer Sadie and Moses Andam. Special thanks to Marcus Ashworth. And questions and comments on the show and all our shows are always welcome. The show email is merrynmoney@bloomberg.net.